This is David Goldman, Asia Times Deputy Editor, speaking to you from New York City the evening of June 21st in New York City. Well, the stock market crashed on Friday, and today it uncrashed. It retraced all its ground, and exactly those stocks which got hurt the most on Friday gained the most today. That's because the market doesn't know which way the Federal Reserve will go. On Friday, the tone was set by a very hawkish-sounding statement by the president of the St. Louis Federal Reserve Bank, James Bullard, who suggested the Fed might be very aggressive in tightening monetary conditions to control inflation. Today, the tone was set by a much more dovish reading by a former head of the Swiss National Bank, Philip Hildebrand, who's also vice chairman of the mega-trillion-dollar money manager BlackRock. And what Hildebrand told television is that the central banks will say what's happening now is exactly what they really always wanted to happen. Yes, it's true there's more inflation than we want now, but in the past there was less inflation than we wanted, so more inflation now simply compensates for less inflation in the past. If that sounds idiotic, it's not my fault, but that's sort of a central banker's way of saying that's my story and we're sticking to it. So if that happens, monetary conditions will remain quite easy for some time, and stocks should do okay because they like easy monetary conditions. But it might not happen that way. If you look at the chart of the day, we see that the University of Michigan confidence numbers point to resistance by American consumers to inflation. The index of consumers who think that it's a good time to buy a house or a good time to buy a vehicle or a good time to buy any other major household durable item has collapsed in the last few months, and that's of course because prices have gone up so much. The price of American homes is up 14% year on year. Annualized in March, American house prices were rising at more than 20% a year. And used car prices are up nearly 40% year on year. So not surprising there's resistance. We also see that the gap between prices paid and prices received by American manufacturers, which is basically their profit margin, has collapsed. It's at the lowest level or close to the lowest level in history as the prices of inputs have shot up. And every time this has happened before in the past, we've had a recession. So even if the Federal Reserve wants to say that inflation is a good thing, it's what they wanted all along, and it's just sort of erring on the other side from the too low inflation of the past, they may not get away with it because both consumers and producers may resist price increases, and inflation itself can turn into stagflation. Now, we've seen this movie before. We know how it ends. We just don't know how many months it will take to get to the ending of this remake, and we all know how it ends. So be afraid, be very afraid. This is David Goldman speaking to you from New York on July 21st.